Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is real estate consultant Ross Kay from thewealthyhomeowner.ca. Welcome back to the show, Ross.
Thanks a lot, Jim.
The Ontario Finance Minister is asking Ottawa to up the capital gains tax on non-residential home sales in hopes of cooling down Toronto's big real estate bubble. However, is taxation the way to do it?
Taxation in the homeowner, taxation in real estate. Again, this would be like every other topic we talked about here on the show over the last year or so. When the government gets involved midstream, mid-market, mid-trading cycle, and they attempt to do things mid-trading cycle, all it does is increases the magnitude of damage that's already done or going to be done in the future. Capital gains on residential real estate. What people have to understand is, and this is something that these real estate investment networks and all of these hucksters out there who mistakenly represent real estate and how it really truly is owned as an investment vehicle. If you own a property, the reason there's no capital gains on real estate as an investment. So you buy a small detached home, you rent it out for 25 years. If anybody has taken the time to track the cost of owning that home over those 25 years, including all the repair and maintenance that are done to the property, you're only breaking even. What a piece of rental real estate actually is it is an income producing vehicle. In other words, you are going, any increase in value, just like any other home in Canada, over the long haul, say 40 years, you're basically just going to break even on that property. After you take care of the roofs, renovate the home 2 or 3 times, over 40 years we're talking, couple of driveways, couple of fences, been replaced a couple of times. Your siding would have been replaced once. No exterior of a house has lasted 40 years. Certainly you would have replaced your windows once. Probably a lot of people 40 years, twice by this time, because technology has changed. Same as technology is going to change over the next 40 years, dictating massive changes to how a single house is sitting on a lot. The cost of owning that house, the sheer cost of owning, not talking about the mortgage, I'm talking about the cost of owning the property, maintaining it, repairing it, and inflation. Those things eat up all equity gained over a 40-year period. So to penalize an investor on the capital gains at the end of the sale date, it really is a huge mistake on the part of the government, because what it does is it penalizes you for the 40 years that you could hold on to that real estate as you provided a rental property in your community. Allowing regular Canadians to invest in residential real estate, as long as that investment is a rational, well thought out process where they're not following these crazy claims that we're seeing on HGTV and these membership networks and that you see out there right now. It is a great way for the housing stock to allow rental units to be there. Instead of discouraging investors, they should be encouraging investors to go ahead and purchase more rental units. Because with more rental units you have, the lower your overall rental cost is going to be. What the government should be more interested in is on locking in rent increases. One of the great legislations the government can bring in is to limit the rental rate increases. The reason for that is that when someone invests in residential real estate to have it as a rental, you purchase it at a certain price. If you're a rational investor, you are going to evaluate the price you're paying based on the rent you can generate. Therefore, those rents will always simply keep pace with inflation going forward. You know that after 25 years, if you purchased it in the right manner, or 17 years, if you purchased it in a manner the wealthy homeowner recommends, or less, 15 maybe, you are then going to have be generating a revenue income for yourself from that residential real estate. You're never going to sell it anyways. So in all fairness, if you're following our model for investment, then what's going to be is the capital gains change that they're talking about making are not relevant because you're never going to sell the property. When you pass on and the property moves to your heirs, at that time they're going to pay capital gains, but they're going to pay capital gains at that time anyways because it's not a principal residence. So this is, again, a failed policy based on poor homeownership knowledge by the Government of Canada and those that are perpetuating these myths upon those making government decisions on taxation.
We'll have more with Ross Kay right after the break.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
GEM International is a new diamond explorer in the richest diamond producing country in Africa, located next to the fourth largest producing diamond mine in the world. International Spotlight is on an 1109 carat diamond recently discovered in Africa by a fellow Canadian junior with a proven operator and finance team. GEM International trades on the TSX Venture Exchange, symbol GI. Visit us at gemdiamondmining.com.
Welcome back. We're speaking with Ross Kay. Ross, by setting up a corporation in BC, can foreign buyers legally avoid the 15% foreign buyers tax? And why would Canadian banks lend to this entity?
Yeah, so Jim, this is another one of the myths. Clearly, I've read this a couple of places in the media the last little while. Those people need to go back and revisit the legislation that was laid down. The government, BC, actually put in place that if a corporation owns it and the corporation is not a Canadian entity or is not predominantly a Canadian-owned entity, that the same foreign buyer tax applies anyways. You also have to remember with if a corporation owns it, then we are no longer talking about a principal residence. Now we're talking about a real estate investment held by that corporation, which means it's fully susceptible to capital gains. So either you can pay the foreign buyer tax on day one, or you can pay the foreign buyer tax when you liquidate. As everyone knows that's listened to me here, I am a full believer in multifaceted taxation for non-Canadian owners. But in this case, with a corporation owning it and capital gains being taxable, any gains over the long haul would then be taxed. We can say that, like any investment, you can use your write-downs and everything else associated with it. But I think that there's enough strength in the legislation that if any foreign buyers, I use the Chinese buyer because that's where the predominance of the foreign investment was coming into BC. The policy that the government brought out has already accommodated such change. So they can attempt to bypass it. I know I read one place something that a realtor was supposedly crafting a strategy to help foreign buyers to try to bypass the tax this way. Well, what I can tell you is that realtor will go to jail if if FINTRAC becomes aware of such a procedure taking place. Certainly that realtor will not have been filling out the FINTRAC forms as required. And you can be pretty sure that soon enough you're going to see some prosecutions take place in British Columbia over this FINTRAC filing issue. So, long story short, The rules are already in place to basically stop that from happening. If they have found a workaround somehow with a lawyer to make it happen, then it's an investment. They're going to have to be capital gains anyways.
So in other words, the realtors are not immune if they set up something like this.
Look, the realtors in British Columbia, you have about, the data that is now in is about, I would say you're about 9 months worth of data that is now in terms of sales. Clearly, there should have been somewhere in the neighborhood of about 8,000 FINTRAC forms completed just in the last 12 months under the Suspicious Transactions Reporting Standard, and actually in the form itself that the Canadian Real Estate Association created for its own members way back in 2014, where one of the high-risk checkoffs when you're doing a deal is a checkoff that includes if you're selling a property to a foreign buyer. That automatically instigated a red flag on that deal, and the brokerage compliance officer was required by law to report it. I think you're going to find that these sort of things are all going to come home to roost now over the next few months, and you're going to find that all of this smart alecky comments about foreign buyers buying and about how that was used to run up the price myth against Vancouver, you're going to find some real consequences hit home about that one.
If banks are mortgaging entities like this with a limited down payment in a recourse province, who's on the hook for the mortgage if the foreign buyer just goes home? The taxpayer via CMHC or the banks?
You're pretty much sure that these won't be CMHC-backed mortgages. Now, what may have happened was the bank may have, I don't want to blame the banks here on this issue, but let me frame it to your listeners this way. Let's say that a bank lends 75% financing to a foreign buyer, and then the bank goes ahead and purchases CMHC mortgage portfolio insurance on that 75% mortgage, which was commonly done in British Columbia, and I am sure is still being done to this day across Canada. The bank has basically used CMHC to insure itself in the case of default from that foreign buyer. So, under any circumstances, whether it's a Chinese bank suing a former Chinese or a Chinese resident for their purchase or moving money into British Columbia, and then they want to get a court order with a reward going back on the equity of that home, or it's a foreign buyer who subsequently quits paying the mortgage and says, we'll just walk away with our 25% loss. All of those sort of things come back on the taxpayer if the banks were prudent enough to use CMHC mortgage default or portfolio insurance on that mortgage. I would suspect this is one of the biggest concerns at the banks right now, especially in British Columbia, including some of your credit unions out there, who probably have taken advantage of that loophole or that facility in the mortgage insurance sector to lower their banks and their shareholders' risks at the expense of exposing the taxpayer to a higher degree of risk. I think the banks have a certain amount of public relations problem going on there, similar to what we saw with TD Bank and what their tellers have been doing in terms of driving their business forward. Every single listener must remember, you cannot trust anyone at a bank to give you advice that is only in your best interest. The bank has no responsibility. They have no staff employed by them. They have no legal requirement to do anything in your best interest. Everyone attached with that bank, their sole goal is to increase the profits of the bank for the shareholders. Anyone who assumes the bank would do anything else other than that is living in la-la land. The banks are only out for the banks. everyone that works at a bank is out for the bank. If a bank was doing this with foreign buyers, using mortgage portfolio insurance to cover their risk, then it's the taxpayer of Canada who would be the ones on the hook.
We'll have more with Ross Kay right after this.
I'm Larry Ray, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com. Welcome back. We're chatting with Ross Kay. Ross, the BC government has just announced that it's easing up on its foreign buyers tax by allowing some people in some professions, if they're foreigners, to buy homes in BC without paying the tax. Is this an admission that the tax was a flawed device in the first place?
No, it's the government now doing another piece of tap dancing around this foreign buyers tax to try to mitigate the damage that they may take themselves. This will make no bearing. Assuming there was a 5 to 6% total foreign buyer component to the market, we're talking now here about this change bringing in maybe a 0.3, 0.4% change to the market. That is not enough to make any difference to home selling prices by any means in British Columbia. This is just another, it just basically proves just how absurd it is the ignorance that governments have on home ownership and how a housing market functions. I think you could basically tell these government leaders, anywhere from the federal level down to the municipal level, any story that you want about real estate, and I think they would believe it. They seem to believe every realtor's words. They seem to believe every new builder's words. They seem to believe every banker's words. They don't seem to believe the truth. And the truth is that a real estate market the size of Vancouver or British Columbia, the magnitude of an increase, the impact of foreign buyers has to have to really change affordability issues out there. If the public was simply told the truth about pricing, it's just not possible. The only reason it happened last year, in the last 18 months, or the 12 months before July of 2016, the reason why that happened is because you had that benchmark price myth hanging over top of everybody's head, making headlines, making media headlines, every single news report, accepted by the government because you saw property tax assessments head up to 60% in some places. That's the only reason why it created a problem. Had people been told the truth about prices, had the assessment office known how housing prices actually increase and how they don't, then none of that problem would have happened. But, as we know now, in hindsight, they don't know what the heck they're talking about.
Ross, thank you so much for chatting with us.
Hey, thanks a lot, Jim.
My guest has been real estate consultant Ross Kay from thewealthyhomeowner.ca. You're listening to HowStreet.com radio. Any questions for the show can be sent to info@HowStreet.com. I'm Jim Goddard.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.